Belle, I want to start with the official manufacturing data because really good news is few and far between when it comes to Chinese economic data. We're seeing a little bit of upside here, though.
Yeah, that's right. This really was, as you say, one of the bright spots that came out of the PMI data over the weekend because we had the official numbers coming out and also the private surveys that came out yesterday. But kicking off with the manufacturing gauge, as you say, because this was where it was looking a lot more encouraging. Take a look at that chart there. You can see we're at 50.2 for September. Now, we have not seen it above that 50 line since March of this year. So that is, as I say, very positive and also a little bit better than what economists had been expecting because the consensus had been for 50.1. Let's change on, take a look at as well the non-manufacturing PMI numbers because that has climbed to 51.7 in the latest reading. It had been, as you can see there, at 51 for August. So again, above what economists had been expecting. So both of these readings overshooting expectations, and as well with the non-manufacturing PMI managing to achieve that in September, even though we are past the peak of the travel period for China. So definitely some positive signals coming out of this, and we really are looking for any sort of indication that we've seen the bottom now for the downshift in China's economy. But of course, not all good news, as you can expect with China. Still some mixed signals coming through, and what really showed was the PMI for small firms in particular, and that extended their streak in contraction to 6 straight months. And so again, it is just a signal of the fragility of the economic recovery, and as well how dependent any sort of move high here will be on further stimulus measures and supportive measures coming through from policymakers.
How about the private surveys, Belle? What did we learn from those?
So this sort of bucked the trend somewhat from what we'd seen from the official readings from Saturday, because the Caixin manufacturing PMI declined actually to 50.6. It had been at 51 flat in August. The consensus had well been for 51.2, so undershooting expectations for the private manufacturing PMI reading. That was really largely driven by a swing in the employment component, and that went into contraction. It had been in expansionary territory in August, so a sign that businesses, and particularly those in the private sector, are still very cautious on hiring. There is, of course, a difference to note between these surveys because you have the official PMI readings that look more at the state-owned enterprises. They're more China-facing. The private readings, they focus more on private businesses and also on exporters. And so, again, it just tells us, though, in aggregate, what we're hearing out of this. Yes, perhaps the bigger businesses, the state-owned enterprises looking a bit healthier, but it's the small and the mid-sized businesses that are still under pressure in China.
Under pressure also the property sector, of course, and the Golden Week holiday seemed to be a key test for this sector. What are some of the signals that we're seeing at this point?
Yeah, that's right, Sherry. As we know, kicking off, or we're in the midst of the Golden Week holiday period in China, and this is going to be very closely tracked for just how much appetite there is for property buys in the market. But ahead of that, or whilst that's underway, we actually had some data coming out for the September period, and that showed us that declines in prices, they started to moderate. So we still saw a contraction in the value of new home sales for the 100 biggest real estate companies. That was down nearly 30% on the year, but better, as I say, than what we've seen in August, because the contraction at that point was near 34% decline. That is according to preliminary data from the China Real Estate Information Corp. Of course, it is a period in which we've seen more stimulus and supportive measures coming through from policymakers to try and spur home buying in the market. What's interesting to note, though, as well, because this came out over the weekend, a new Bloomberg survey from Chinese stock investors, and they're still saying that the worst is yet to come for the property crisis. You can see in this bar chart here what the top risks are for Chinese equities going into the fourth quarter, and it is that property crisis that people that we're speaking to still has a ways to play out, and actually even ahead of geopolitical tensions, which has been another reason why traders and investors have been so bearish on mainland equities in general, Paul.